This is Charles Nenner. Some observations on February 23rd. We have been negative on the bond market already for months, and actually, the bonds are down, talking about the 30-year bonds, almost 20% since we sold them. At the time, I warned that everybody was falling asleep because there was a bull market going on for bonds for the last 40 years, and people actually forgot that bonds can also go down. The problem is that much more people are invested in bonds, and pension funds are much more invested in bonds than equities. So it's going to hurt at the end. Another problem is that if the economy will pick up, interest rates will go up, and bonds will never come back to the level where we got out of it. So I'm afraid that a lot of people who didn't sell are going to be stuck with bonds that give 1 or 1.5%, which is problematic because if inflation only picks up to 2 or 3%, which is very reasonable, there's no way to break even. Now I do the special update because the S&P failed again at the trend line that I have been publishing, the trend line that went back to 1880 until now stopped all the up moves, and that up move that was supposed to stop around 3950 to 3980, which it did. The cycle here looks a bit toppy, and I think the upside potential for stocks is not looking very bright. Therefore, we are keeping still our call spreads on the VIX, although they march, and I hope they don't expire before the real down move starts. But investors who are still long stocks, I would really advise them to put down a call spread or just buy some calls on the VIX outright in order to hedge their positions. Because again, I don't want to see the same situation on stocks that we saw on bonds, that stocks go down, and at a certain moment, investors who didn't sell are waiting for a bounce that is never going to come. I hope this was a bit helpful. It was more for longer term traders than for short term traders. And again, we have to watch the sell levels on the S&P and Nasdaq very carefully in order to decide if this is the beginning of something serious or it's just a small down move. But even if it's a small down move, I don't think this year we can get much above the trend line that is coming in between 39.50 and 39.80.